Hello, welcome back. This is SeeWing Yee from the Yee Real Estate Network, and today's topic is Airbnb bust. That's right, short-term rental is crashing, or is it? Well, let's share the video and let's get it started. And please don't forget to subscribe and like to my YouTube channel. All right, Airbnb boom. Is it turning into an Airbnb bust? Why thousands of pandemic era short-term rental investors are struggling, and why professional hospitality operators keep winning. Here we go. A new class of investor was born overnight during the pandemic. Yes, it was very, very easy to make money. Growth rates in short-term rentals during the pandemic just skyrocketed. Why? Because of the historical low mortgage rate that fueled the rapid demand. 1 in 4 new short-term rental hosts today never having run a hospitality business. So, it's FOMO, right? Fear of missing out, and demand, appreciation, lack of supply, and people they want to get away from the congestion during the epidemic. So back in those days, that's 5 years ago. Now the tide is turning. Now vacancy are rising, regulations are tightening, and operators who treated this as a passive investment are finding out it's not passive. It's very much active. While the why the pandemic created an Airbnb investment boom, you ask? Remote work, right? Stimulus and savings needed a home, all right? Nightly rates and occupancy spike. Social media made it look easy. YouTube, TikTok, Airbnb, arbitrage, all the get rich quick schemes is floating around during the pandemic housing boom. It was a perfect storm. Cheap capital, right? Low interest rate, surging demand, easy platforms created a rare window where almost any short-term rental could perform well, regardless of operator skill. That window is now closing. What made it easy in 2021 and 2022? Like I said, cheap money, low competition, sky-high demand has reversed on every front today. The next slide will walk you through each shift. The historical low mortgage rate fueled rapid expansion. Okay. Sub 3% financing, okay, meant an investor could buy an STR at a premium price and still cash flow. But that math has fundamentally changed. Look at the average 30-year fixed rate mortgage back in 2019, before the pandemic, 3.9%. 2020, 3.1, 2021 at the peak of the pandemic, 3.0 or even lower. Then the second half of 2022, that's when the mortgage rate spiked tremendously. And then in 2023, look at this, 6.8%. In 2024, 6.7. And now we're standing around 6, 7. Okay. Mortgage rate more than double and triple. New buyers face payments 40 to 60% higher for the same purchase price between 2022 to 2025 as opposed to 2020 to 2021. Okay. Some investors, they use ARM, adjusted rate mortgage, or bridge debt, are now facing painful resets. So why many investors underestimated the hospitality business? An Airbnb is not a rental property that happens to turn over often. Okay, it turns over often. It's a hotel business, hospitality business. Treating it like a passive long-term rental is not the way it goes. The expectation, oh, set it up at once, then collect passive income. A property manager, a Airbnb property, I mean, a short-term rental property manager handles everything. Nightly rates stay high all year round. Reviews and rankings take care of themselves. Cleaning and turnovers are minor details. The reality, dynamic pricing must be actively managed daily and weekly. Guest communication is a 24/7 responsibility. Demand is seasonal and highly competitive. Rankings depends on constant review management. Turnover, maintenance, and restocking never stop. Market saturation and increasing competition. Look at this. Every year, estimated growth in active US STR listings, as you can see, continue to increase. Supply grew faster than the demand in many markets. Okay. So average nightly rate stall. Guest expectation rising. Revenue per rental compressing across many short-term rental markets in the country. Rising vacancies and operating expenses. Revenue is under pressure from one direction while costs climb from another, squeezing net operating income for under-managed properties. Softening occupancy, off-season vacancy stretches, cleaning and turnover costs going up, insurance, HOA, utility increases, local government regulation restricting short-term rentals, okay, permit caps and moratoriums, owner occupancy requirements, minimum stay restrictions, new taxes, licensing fees, zoning enforcements, and HOA level bans. All these are tremendous challenges, okay? The reality has set in. So why many Airbnb owners are trying to sell right now? Like I said, compressed margins, rising rates, regulatory pressures have combined to push a growing share of pandemic era buyers towards the exit. Okay. A lot of Airbnb that I know of, I've talked to a lot of people. Okay. I've talked to a lot of colleagues and friends. Okay. And many of them, the owners of Airbnb, they're telling me for the past couple of years now, okay, they're telling me, oh, cash flow has gone negative or break even at best. Okay. They're going through a lot of burnout from self-managing a 24/7 hospitality operation. Okay. They, they're in it over their skis. They have no clue of how hard it's going to be back in those days. Refinancing at today's rates are no longer penciled out, right? Due to the high mortgage rate right now is 6.7% probably. More restrictions in many uh, short-term rental markets, okay? More local restrictions. Property values are softened, some have gone down, and owners are selling to stop the bleeding. But selling is not simple, right? It's a buyer's market right now, okay? So we have to face it, and the buyer is negotiating everything. So there's more supply than demand of all kind of housing, not just short-term housing operators. They try to get out of the game. So many owners who bought at pandemic era prices with pandemic era rates are now faced a hard truth. Okay. And we haven't even talked about taxes. Okay, let's talk about taxes. Okay. The tax side of Airbnb exit, depreciation recapture, capital gains, and all that. People just didn't those amateur operators that bought back in the pandemic, they have no clue. They don't know about the exit tax strategy. They did not consult the tax advisor. So, oh, you make your money on the buy. Well, you're gonna lose money on the sell if you do not understand the consequences of selling and the tax consequences as well. All right. So let me tell you what I mean by that. Okay. Have you heard of When you got into the game those operators, when they got into the game a few years ago during the pandemic, do they even understand what depreciation recapture tax means, especially when you sell a property? And if you don't have a strategy, if you don't have a 1031 tax deferred exchange, okay, every year an owner, oh, what about, oh, you know what? What else? What about somebody that use a short-term rental tax loophole, right? You know what I mean by short-term rental tax loophole? That this means if you perform 100 hours of self-managing your property, of material participation on a short-term rental, you can potentially offset the W-2 income. You can passive losses, depreciation. If we do a cost segregation, 100% bonus depreciation, if you accelerate the paper losses on a short-term rental tax loophole, you can offset against W-2 income. So all those newbies, short-term renters out there, owners that have entered the game during the pandemic, they got some tremendous tax write-off. Yeah, chunks of money, tens of thousands of dollars of IRS tax refund by using the short-term tax loophole. Guess what? What they what they do not understand is the consequences of selling. Okay, you have to pay a depreciation recapture. Okay, you know how it works? Depreciation lowers the taxable income each year of ownership, right? We get that. It also lowers the property's cost basis. When you sell the property, if you can sell it, right? A lot of properties will linger on 60, 90, 120 days. You have to reduce your price, right? You have to, so uh, when you're able to sell it, the accumulated depreciation is taxed. The, the, the depreciation recapture tax rate is at 25%. That's on top of the capital gains tax you have to pay. Let me show you the numbers. Okay. When you bought the short-term rental back in those days at 400 grand, right? You have taken in the past 5 years, you have taken $54,500 in depreciation, paper loss against your W-2 income, whatever. Your adjusted basis become 345. The recapture tax is 25% of that amount equals 13,600. All right. And on top of that, especially if you hold any rental property and sell it under a year, you have to pay a short-term capital gain. A short-term capital gain is taxed as the ordinary income. Depending on your tax bracket, if you make $150,000, $200,000 W-2 income or more, you might be paying up to 37% federal tax rate. And if you live in California, that's another 13% state of California rate tax. So many pandemic era, quote, flip and sell, end quote, investors fall into this bracket if they exit within a year of purchase. If you hold it for over a year, right, that's, well, your tax hit is not as significant. You are subject to the long-term capital gains. By the way, please consult your tax advisor. I'm not a tax advisor, so uh, just a disclaimer, this is an educational presentation. All right, so if you hold over a year, when you hold a property, then if you sell it, you're taxed at a preferential rates of 0, 15, or 20%, depending on your federal tax bracket. All right, so it lowers the tax bill if you hold it for more than 1 year and you sell it, but you still have to pay recapture in addition to the ordinary taxation. Well, some of you, if you're savvy, you have some equity coming out of your short-term rental. If you want to sell, you may want to do a 1031 tax deferred exchange. Okay, a tax deferred exchange if when you sell your short-term rental, okay, and you within the 45 days you identify up to 3 replacement properties, and then within 180 days or within 6 months you complete the purchase of the replacement property, and then and only then is not an elimination of your capital gains tax. Is not an elimination of your recapture tax. It's a deferment. You kick the can down the road, if, in other words, right? You kick you kick the tax can down the road. All right. Am I clear? So unless, if you continue to do 1031 exchange every few years or whatever, yeah, you can defer capital gains, you can defer uh, uh, recapture tax, whatever. And better yet, if you hold on to your property forever, and then when you pass, right, your estate can pass the asset at a step up in basis, so your estate does not pay any taxes on all the potential gains of your property over time. So we call it buy, refi, 1031 exchange, and die, right? So at death, everything step up in basis to fair market value at the time of death. So your estate does not pay any capital gains tax on ordinary taxation. All right. So your beneficiary is gonna be very happy. They are inheriting your assets without paying any kind of taxes. Of course, consult your licensed tax advisor, as I said before. Okay, and let me see what else. So the top 10%, I believe, all the short-term rental operators continue to outperform because they do a good job of managing. They are very savvy. They have a lot of good amenities. They may even own those kind of luxury short-term rentals. Okay. But a lot of people, the bottom 50, 60, 70% of short-term rental operators, they are struggling. Okay. They're struggling because you know, they're not, they are full-time W-2 employees or whatever, performing their respective job and their respective occupation, you know, becoming, is a short-term rental operator doing Airbnb, is pretty much a second job, right? There's no time freedom. You cannot scale your portfolio of Airbnb properties. You know, owning a one short-term rental property is challenging enough. It's brain damage to a lot of people. Personally, I never bought any kind of short-term rentals. I don't want to. I just buy boring rental properties. In fact, I'm working on co-living properties. That's my forte within my company. We're helping investors buy uh, uh, co-living properties. I'll share that with you momentarily. Okay, so professional operators are winning. They know how to run the business. Okay, that's the bottom line. They know all these kind of things, as I mentioned. So lessons every investor should learn before buying any type of short-term rentals. You got to do the underwriting for today's rates. Okay, today's mortgage rate, today's market conditions. Okay, you have to do a lot of research and due diligence, stress test the occupancy, go through all kind of projections. Okay, run through the air DNA. There's a lot of softwares available for you, a lot of resources for you to check the local regulation, obviously, right? Make sure there's no restrictions in that short-term local market. So hospitality, running a hospitality business is a skill. Not many people have this kind of entrepreneur capitalistic skills. Okay, most people are passive workers. They work for others, W-2, right? Work 9 to 5. Okay, to develop a hospitality skill set is very, very difficult, right? You got to be very proactive. You got to be attention to detail. You got to work. It's a lot of work involved, a lot of effort. Okay. And a lot of people just don't know how to plan for the exit. Okay. And so it's not passive, it's a very much an active business, short-term rental. So not every Airbnb is failing, of course, as I mentioned. Okay. The scale operators still win. There's still a lot of demand out there. It depends, right? Some legitimate vacation resorts, like the Smoky Mountains and Palm Springs, or up Smoky Mountains, or yeah, those very highly specialized, you know uh, short-term rental vacation resorts, very high end. They doing fine, but for mom and pop, less skillful short-term rental operators is not easy. I could see why many people are selling the property or try to sell it. Okay, so uh, the passive investor era of the pandemic is over. Okay, So you know what's happening? What I've seen, quite a bit, those short-term rental operators knowing by experiencing, they learned their lesson. Many people crash and burn. Okay, many operators crash and burn, but some smart ones, they are transitioning into, you know what? I'll tell you what, they're entering the co-living investment model, something that we are doing right now, something that my network, the Yee Real Estate Network, are promoting. Brand new construction, co-living. So here it is, our brand new construction, co-living, rent by the room, one of the fastest growing housing markets, real estate asset class in the world, in the country. Okay. And we built in the areas of rising demand. Workforce housing, rent by the room investment model, one bedroom and one bathroom model. Very, very highly successful. We've been doing this for several years. We have several investment program, loan housing models. Seven bedroom, seven bath, 320K. You put 20% down payment. You rent all seven rooms out. You can achieve as much as $2,000 net monthly cash flow. But I'm not gonna go over the details. You can sign up for my YouTube channel. You can log into my website, become my free member of our investment network. Then you learn more about this kind of stuff. All right. So we have duplex available. Also, 14 bedroom, 14 bath for 600K. You put 20 to 25% down payment. And after all the deductions, you can get about $5,000 monthly cash flow. So very, very amazing returns. That's why a lot of Airbnb operators, they are exiting and they are entering the co-living investment model. So that's what's going on. All right. So things are changing, so you need to find the right buy box for yourself. If short-term rental are not your forte, is not your cup of tea, enter into co-living, which is a lot more passive because we have Pass Split as a marketing technology platform. We have co-living property managers available for each of our investment models in Florida and Texas. So you can become a long distance remote operator and spend very little time in managing your co-living properties, like 1 to 2 hours per month, and you can do it remotely. Okay, no brain damage. No, you don't need a second job. You have time freedom. That's the key. Okay, the focus on what's important to you, and you're not creating a second job. You're not creating to do Airbnb, short-term rental stuff. This is long term investment rent by the room model, which is growing by leaps and bounds. Thank you so much for watching, and please like and subscribe to my YouTube channel. This is SeeWing Yee from the Yee Real Estate Network. Thank you for watching. I'll see you next time. Bye-bye.